Hello there. According to the huge investment bank Morgan Stanley, the threat of a Corbyn-led Labour government is more of a danger to UK business than Brexit. Morgan Stanley, the US investment giant, has told its clients that there is a 2/3 likelihood of a UK general election in 2018. And it is the prospect of a Jeremy Corbyn win, followed by nationalisation of certain industries, higher taxes such as corporation tax, and switching more attention to lower income households that should have investors worried, said the Morgan Stanley brief. For the UK market, domestic politics may be perceived as a bigger risk than Brexit, said the report. From a UK investor perspective, we believe that the domestic political situation is at least as significant as Brexit, given the fragile state of the current government and the perceived risks of an incoming Labour administration that could potentially embark on a radical change in policy direction. So in Morgan Stanley's view, it would be the huge change in government priorities that would pose the risk, compared to elections in the last 30 years that had general elections where the incoming government had not veered too far from the path already set by the previous administration. This time it could be vastly different. Now you could look at this in one of two ways. Either a Corbyn-led Labour government really will be a total disaster for the UK, or that Brexit is going to have less of an impact on the UK economy than the more traditional lurches of direction that a new government brought before the 1970s. Either way, doesn't it really mean that the potential effects of Brexit have been over-egged? The Bank of England, though, has said today in its latest financial stability report that the UK banking system is resilient. According to the report, the latest banking stress tests of the UK's major banks show they are now 3 times stronger than they were 10 years ago, and strong enough to not only withstand, but to also keep lending in a scenario more severe than the recent financial crisis. The Bank of England's doomsday scenario includes nightmares such as a 33% house price drop, a GDP contraction of 4.7%, and a doubling of the unemployment figures. But do these tests show that our banks are anywhere near being Corbyn momentum resilient? You have to wonder, don't you? Changing tack to defence, a new report from the Henry Jackson Society titled Global Britain and the Future of the British Armed Forces calls on the government to increase defence spending by 0.2% a year over the next 5 years until we have increased it from the current 2% to 3% of GDP, or about £71 billion a year at today's prices. This would put it back in the realm of our average defence spending over the last 40 years of 3.2% of GDP. This spending should then be mandated in the form of legislation, akin to that used by the International Development Act to protect foreign aid spending, says the report. There are many who would just say, why not just join in with the EU and have it all on the cheap? But that fails the test of UK national interest. For example, how many in the rest of the EU would get out of bed, let alone travel 8,000 miles, then yomp through the mud to fight and defend the rights of Falkland Islanders to remain within the UK sphere of interest? And would the new EU foreign policy sanction it anyway? For me, as we proved in 1982, we can and should be capable of going it alone when looking after our own UK local and international interests. And that national capability takes financial investment and a core belief by service people that they have the backing of the people and are defending their nation's interest in a just cause. Especially when you're asking those servicemen and women to go and risk their lives for you. And now in some good economic news from the past couple of days. The German-based international pharmaceutical company Quagen is looking to bring 800 new jobs to Manchester to work on genomics and diagnostics. Quagen said, We are considering investing in Manchester because we have a very good experience of the skill set available and the people there. With an office already in Manchester, the city is contributing very much to the success of our business, and the growth of personalised healthcare is going to be the future. And another pharmaceutical giant, Merck, will site its new headquarters for 150 researchers and 800 additional staff in London. We believe London to be a unique bioscience centre of excellence and a key component of the established Golden Triangle for academic science of London, Oxford, Cambridge, said Louise Hewson, Managing Director, Merck in the UK and Ireland. These two companies are bringing over £1 billion worth of investment in research hubs to the UK, says the Financial Times. So, not all doom and gloom on the horizon as some would have us believe, is it? What do you think? Please leave a comment below. Thank you. Please do like and share this video, and also subscribe to my channel. And when subscribing, please do remember to press on the little bell next to the subscribe button. That way you'll get an alert every single time I put up a new video. Thank you very much for watching.